guys. Hi. Good afternoon to everyone tuned into the frequencies of blockchain's future. Today, we will try our best to navigate a digital ledger deeper than a submarine in the trench, accompanied by 4 titans of venture capital who have seen more ICOs than most of us have seen crypto meme coins. So let's blockchain the talk, okay? As we set sail, so let's first chart the waters of blockchain's current and the future vistas, I would say. So considering the shift in global finance and the technology, how do you view the future trends of blockchain technology and its applications? So, and if you dare to venture, which emerging sector excites you the most? So let's say begin with Lassen.
Yeah, hello everyone. My name is Lasse Clausen. I'm one of the founding partners of 1KX. We're one of the earlier funds in the space. First fund actually to focus exclusively on tokens, on digital assets. As the firm has grown, we also venture out a little bit as well, but we're generally an early stage investment firm, so we're a venture capital firm that invests in the crypto ecosystem since 2017. And I think coming back to your, to your question broadly, I think it's almost like the lowest common denominator right now to predict on how this is going to be used at a larger scale. I think there seems to be now some consensus forming in TradFi as well. It's mainly from, led by Larry Fink, the CEO of BlackRock, that, sort of tokenization of real world assets, which basically just means that we use blockchain and crypto infrastructure to do, trading, clearing, settlement, which is, if you look at it, what happens in the real world, you buy, a stock on Robinhood, there's this insane, inefficient, slow process happening in the background of, trading on Robinhood, then clearing, and someone's trying to figure out, did Robinhood sell enough of the stocks that they actually theoretically have an IOU on? They do the settlement, the clearing, and then the settlement. That takes like 2 days. So there's trillions of dollars of capital just like locked up in all these different, towers full of people with different spreadsheets, just trying to figure out whether my number in the spreadsheet actually matches what your spreadsheet says. And then whether, if you just compare that to a trade on a decentralized exchange, trading, clearing, settlement is all one and the same thing. It happens basically you're in a second or less, depending on which L2 or L3 you're on. That's it. You have no counterparty risk. You have no, provably impossible for any operator fraud to occur on the exchange level. So I think that's kind of like what I see now. It seems to be like the lowest common denominator to just, take some real world assets, tokenize them, and then use basically blockchains, decentralized exchanges, lending protocols, etc. Which for us is actually kind of basic now. Anyone's been in the space for a long time. Most of this DeFi stuff is called basic DeFi primitives, but they are actually, 10 if not 100 times better than if you really look under the hood of an equity trade, for example. There's also a really interesting number. I think it's 10 or 50% of all global bond trades fail. So they think they've done the trade, and then in the settlement and the clearing process, something goes wrong and the trade just didn't happen, right? And so I think that's like the lowest common denominator, a big one where, we just have to settle on, do we trust, I don't know, that Citigroup issues some tokenized asset, and then on-chain you believe this is real, you don't really question the redemption mechanism too much anymore. The same way it happened with Wrap Bitcoin, right? We know now except, like, who here has had Wrap Bitcoin in some form in the wallet, and who here actually knows how the redemption process would actually work, how long would it take, etc. Right? So that's sort of like, kind of, I guess, what in-depth more answer of mine. Where do we think we're going to settle on like a larger kind of use case?
So what about you, Ronnie?
Yeah, quick intro. I'm Rodney, Hack VC. We're based in North America. We're a crypto-native venture capital fund that, with like a big developer community. As for where I think the crypto space is going, it's pretty interesting to see a lot of different pieces of technology coming together, over the past few quarters. AI in the real world has been a big topic over the past few years. And at the same time, I think like crypto's going through another, Cambrian explosion of innovation with a lot of people looking at a lot of new categories of business. And, within the world of crypto AI, I think we're definitely going to see a lot of really interesting, use cases on the supply side and on the demand side come together. Specifically, the stuff I find most interesting is like decentralized compute, especially because like compute for the AI side for like image or video rendering is 5 times more lucrative than compute for the Web3 side. Yeah, it's just going to be interesting to see how all of this plays out over the next few quarters, and I'm really looking forward to having an outstanding application on the crypto AI side become popular in the future. Yeah.
Good evening, guys. This is Vineet from Cypher Capital. We are a $100 million fund based out of Dubai. Over 400 investments across last 2 funds. Some of them are Sui, Sei, all the big names out. Well, coming to the question that you asked, I think we're too early in this sector. When we look at the numbers, Crypto.com came a report that there's 400 million wallets out there, which basically means if I assume one wallet is one person, it's 4% of the world's population. And personally, I believe out of that 400 million, 90% are just waking up in the morning to see BTC price. They really are speculators who have no clue how crypto is changing the world. So I think we're too early. It's someday you will have 1 billion plus users. Someday people will start using blockchain for real world transactions. It can be either RWA assets where people tokenize their real estate. It can be something like a WorldCoin, which is actually digitizing a person into a hash rate, so that it's something like the Aadhaar card in India. So I think use cases will take time to come around. We're too early. We are like in the 1990s.com crash where everyone wanted to build up a amazing website and raise millions on it, and use cases later on followed. Now, personally for us as a fund, we more or less invest on teams who have track record of building something, and the idea makes certain sense. But if you look at the flavors that have been growing, I think in the bear market, everyone was investing in things that could last longer. You had the infrastructure layers where people were raising $200-300 million to survive the bear run. You had Suis of the world, Seis of the world. But coming now, it's all about, I think people are looking at how can users come on board. How many highways are you going to build with layer ones? And then you need cars on them. You need dApps that can actually get users. So for us as a plan, we are investing in things like games. I think games is the best way to get users on board. I think last season was all about games that had great tokenomics. This season and next season is all about games, having real games where people play these games. We're looking at RWA as a sector. I personally am very bullish on NFTs, especially ordinals. We've been investing a lot on Deepin as well. One of our investments, Peak, is making a lot of news as well around that. So these are 4 or 5 sectors where we think users will come this season, and that's what we are investing in. Cool. Thank you.
Okay, cool. Hi, everyone. I'm Gavin. I'm CIO of SNZ Capital. I'm based here in Hong Kong. And we have been working together with Hashkey Wanxiang Group for nearly 10 years. And we have been the earliest supporter for Ethereum back to the old days in Shanghai. And have been actively engaged in community, like a developer community, like incubation, as well as investment. Currently, we run 2 books. Like one is like principal book is more founders money. The principal investment, a very flexible mandate. Actually, we are LP for Hack VC and Hashkey Capital as well. So with lots of making lots of partnership. And the current focus is on the venture side. So the venture is focusing on early stage, like pre-seed, seed investment. I think the other 3 honorable guests also made very good points regarding to the potential massive adoption. From our side, like 2 very high level kind of investment thesis and focus, right? The first one is like taking digital asset as an emerging asset class, right? It's an alternative asset class. The wallet share, the penetration rate is going to pick up. That's an inevitable trend, right? To address those needs, getting along with this trend, you will have all the infrastructure, as Lassie mentioned, like so the trading facility, settlement, etc. That's for sure is very, it's really necessary, and it's happening in minutes, right? Because you can kind of imagine back to 1917s when you are doing stock trading in the exchanges. I need to say, hey, like so $1 to buy one, like a full stock or whatever. Is like you just yelling. It's like a supermarket, like a supermarket, right? But now it's like later on they move to like electronic trading. Then you have like lots of unicorns, like huge companies like winning in that trend, right? So blockchain for sure is like on one hand because of the digital asset in essence it's a different kind of asset. there will be huge like adoption. On the other hand, like as an infra layer, it could provide tons of potentials. To give you an example, like JPM coin, right? JPM has like 1 trillion JPM coins, purely helping like the overseas branches to do like settlement, clearance, etc. That largely enhance like the efficiency, right, for them. The second investment thesis we're looking at is like blockchain as a kind of a like tech development, a disruptive tech innovation or business model innovation. What kind of the real demand they can address? If we are thinking of like people are sometimes like talking, well, this is Web3 festival, right? So we are moving from Web2 to Web3. Personally, I think it's still not there yet, especially when we compare to mobile internet, right? If we consider mobile internet is Web 2.5, you can see like from Web 2.2 to Web 2.0 to Web 2.5, there's a huge kind of a change. So, for example, right, if you don't have this kind of location-based services, you cannot have a Uber, right? This kind of then this created tons of real demand that people, we will engage in daily lives, right? So for crypto nowadays, like mostly people the demand is still around trading, earnings, stakings, etc. To some extent, well, this is something controversial, right? Some people may argue this is not real demand for a normal layman, right? So then the idea is like some of the other guests mentioned, like okay, gaming and the other emerging application, whether they can like bring the normal layman to join the Web3 world, join the blockchain world, that could potentially open a new, new area. So that's what we will be very excited about. Yeah, thanks.
Thank you, guys, for the introductions and the insights. And so let's talk about more sweeter investment strategies. So I'm curious, when assessing investment opportunities, which factors are most important to you? And how have recent fluctuations impact your investment strategies recently? So let's maybe we start with Gavin this round.
Okay, sure. So you can consider, like the team comes from a traditional finance background, so you can consider us like more like we try to be more organized and systematic, right? So internally we divided in sectors into threes. The first one is called infrastructure and the middleware. The second one is application and content. The last one is the financial related, including DeFi and CeFi. So personally, I'm more focused on the infra and like a financial related side. So those are the like general sectors we are focusing. Mostly cover everything, but like we do have some internal, I would say red line that, i.e. some of the things that we don't touch, right? Some for example like legally or like morally or reputationally might be very risky. Like then we don't get into those industries. For example, like pure gambling. So we're not doing that. Like drugs and whatever. Like like we don't do that gray market stuff. And secondly, like some things like from business perspective, like it's really hard for us to understand sometimes like a narrative in the industry is like the words you can always hear, right? So even some of the pure narrative play can work, or like in terms of like evaluation or whatever, but those might not be our cup of tea. So from our side, at least we need to really understand there is a like solid business model. Of course, like crypto enjoy the higher multiple, like valuation multiple, whatever, but like at least you need to have a real solid business model. So that's what we were looking for. So lastly, we don't do too much like well, I know it might be controversial, but like it's like we cannot do too degen, right? It's like it's a meme coin, etc. They might be a little bit too much for us. Like although we spend tons of time to understand to spend on the infra, etc. But like pure meme, this kind of thing might not be our given the mandate limits. So those are generally what we are looking at. Thanks.
So, the second question was quite interesting, where you said, how did the developments actually impact our investments?
Yeah, the fluctuations.
Actually, I think everyone is a Warren Buffett when BTC is at 70,000. Everyone knows what to invest in. For us, we've been consistently investing. We did 90 investments in the last 18 months. And I think it was all about investing in the last 2 years, not just investing in terms of projects, investing in terms of meeting people and building up relationships. In the next 1 year, when BTC probably goes over 100,000, you will see the room full of VCs who just woke up 20 days back. I call them tourist VCs. So as a VC, you cannot be seasonal in nature. You have to keep on investing if you believe in the technology. And that's what we have done. Now, with respect to what excites us to invest, in then investing across Web 2, Web 3 is all the same. You really need to know whether the team has the capability and the capacity to do something great. They have to, those cool kids can also build something great, but people have to have the expertise to build a $1 billion entity. Second, we have built up this whole theory about a need case and a want case. You need water and food to survive. Similarly, you need things like Ethereum because 80% of the smart contracts are on Ethereum. You need a BNB coin because you'll end up making millions on the Binance Launchpad. While a lot of projects are want cases, that means you take my token and someday, it's like a Ferrari. You want a Ferrari, but it doesn't really kill. If you don't have it, you don't die. So similarly, a lot of tokens are want cases. Governance is technically, who goes and votes? I haven't voted for sure. There are a lot of projects which are giving up these coins, which will give you a 30% discount on some project, something that you buy on their platform. I think I can go to Amazon as well. So for us, we look whether this token has a need case tomorrow. We definitely, business models are critical, but let's be fair, how many of those 10,000 tokens on coin market cap have huge revenue streams right now? It's still early stage. So we look at how money will be generated, but do they have to have money right now? I don't think with the amount of users in there, there's strong traction put on that. So team, use case, business model, and how strong the technology is. That's what we look at.
Thank you very much. How about Ronnie?
Yeah, for sure. Maybe to start, I need to read a disclaimer. We're a SEC registered investment advisor, so all these opinions are my own, and I can't comment on any hack VC related strategies specifically. But I've been angel investing for a while. The founders that I like to work closely with are the ones that play long-term games with long-term relationships. And especially ones that care the most about the community of people that they work with. The ones that care about building something that's actually frontier tech and not just about token listings. The teams that care about incentivizing the right kinds of people as well. And apart from that, there are all sorts of different kinds of standard parts of diligence and stuff like that that an investor would go through when you're looking at making these sorts of investments. But I think that over time, the dynamics between the founder, the team, their ecosystem, and their community is really the moat. Because the reality is that the frontier of innovation continues to move forward, especially when Cambrian explosions of new financing for new tech come in. And this is all open source tech, so the defensibility really does go down to community at the end of the day.
Yeah, I would agree with a lot of the things that already been said. What I could add is that towards the end of your question, you really have to understand the motivations of the founders, and it's just insane how many, and it doesn't matter, they can have great academic pedigree, or they can be just, lifelong hustlers. It doesn't matter, just how many people just want to raise money. Really, that's at the end of the day, and they're convincing themselves that they think this is a great project or a great idea that they need the money for, but you can really tell that that's just their mind playing tricks on them because they really just want to raise money, pay themselves a salary, and kind of, fly to conferences and kind of thing, and then figure it out. And so it's incredibly difficult to just differentiate those because again, they come with some wonderful academic pedigrees, etc. So you can't really tell. The timing is pretty easy because if someone who raised in a bear market, the odds of them actually raising a lot of money are very low. So they're probably way more motivated to actually see this thing built that they want to build. And so that's just a broad, I think that's a pretty easy low-hanging fruit to see when they're raising, and then, just ask the question, how much are you paying yourself? You'd be surprised how many times they come out with oh yeah, I'm paying myself $250K because I'm the CEO, and it's okay, but you're raising $2 million. I mean, fucks up with that here. So, so it's some pretty basic stuff. Really trying to understand the founder motivations are important. And then another thing which is harder, but it's just the ability to grow, because you're ideally every second day you're out of your element as a founder. You're just catching up to how the project is growing, and you're just trying to intellectually, in your mental models, in your execution, in your energy levels, in your leadership, you know, how you're guiding teams, like you're constantly out of your element. You constantly have to level up. You constantly have to become better and smarter. And that's also a hard one to predict, but you can kind of see these patterns of just certain mental models, just certain ways that people talk about their shortcomings, how they are, you know, they have self-awareness, do they have general like frameworks, and how they try to figure out where could I be wrong, and they're unemotional about it, right? And so another way is you just like ask really stupid questions about their project. Like you just question it on a very fundamental level, like almost insulting.
Okay.
And then you can see how they react, right? And if they get offensive and aggressive, then it's maybe not so good. If they're very patient and you know, and trying to see a way that they could be actually be wrong. Yeah, those just to provide some additional color to what these guys said. Yeah.
Thank you very much. And nowadays, I think artificial intelligence is an inevitable and game-changing topic all the world. So we're at a fascinating crossroads where AI isn't just an add-on, but a core component that's turbocharging blockchain's capabilities, right? So I'm curious to hear from our panel. In practical terms, how is AI being integrated into blockchain projects today? And what kind of technical innovations or collaborations do you think we need to really harness the full potential of AI in the blockchain?
I mean, I think on a high level, you can just say whenever artificial intelligence autonomously transacts with value, with money, it's going to be on blockchain. It's not going to be on Swift that turns off on Friday at 5 p.m. and you know, sleeps on the weekend, or whatever Swift does, and ACH, etc. Right. So you really want the not just immutability, but the guarantees, the liveness guarantees of blockchains, right? Those are the most resilient databases in the world. And so that's on a very high level, you know, if AI starts transacting autonomously with money, it's going to be on blockchain, 100% for sure. Then now there's a lot of, I mean, now there's this kind of peak AI hype, and especially peak crypto AI hype. So there's a lot of vaporware out there. Again, I would check with these founders, you know, what were they doing in the bear market versus did they just start their project a couple of months ago, et cetera, right? And so there's a big risk here that is just sort of opportunistic founders raising a lot of money, trying to figure it out. Maybe a little bit less high level is another thing, that just sort of attestation, authenticity, origination kind of attributions are going to be a huge issue, right? So just as an example, I think it was a Hong Kong investment firm where I think the CFO had a video call with the CEO and the COO, and then wired $30 million to the wrong bank account, right? And all these guys on the Zoom call were deep fakes. And he just wired on the instructions of them, right? And so there's going to be a huge issue knowing that if you're talking to someone on a Zoom call, is that actually the person they're saying they are? Because with deepfakes, you can create that, right? So that's, you know, just a simple example of attribution where really you have no way of knowing that unless you start actually integrating cryptographic keys, meaning that my wallet, which is known, and you know, and that wallet signs a message and authenticates actually that it's me on the Zoom call telling you to send some money over there or not. There's also some where, you know, you have to prove that the computation happened on a certain smart contract. So again, that comes back to the authentication kind of origin kind of attestation questions. Like, you know, you're claiming that this, you know, zero knowledge proof went through these different smart contracts, but how do you actually prove it, right? And so there, you have some functionalities there, or some use cases there. I think there's like, oh, a decentralized AI compute network. There might be something there, but I'm also skeptical because it's just like a simple narrative that people like, because you had like decentralized compute networks in crypto, and now they do decentralized AI compute networks, you know, and so that's like a really like left curve kind of thing that works really well. Like, oh, it's the same thing but AI. So, you know, also be careful. It might be a little peakish here.
Thank you very much.
Yeah, happy to share my opinion on crypto AI. On our side, at our fund, we've all been like Web2 VCs in SF, you know, before 2020 as well, and a few of us have accumulated, you know, 50 to, you know, or more AI portfolio companies before then. So we've seen a lot of the, like, Web 2 AI world kind of play out. And so when we approach Web 3, the way we started to think about it is, where does value accrue in Web 2? In the real world, NVIDIA is one of the most valuable organizations on earth now. And on top of that, companies like OpenAI have publicly stated that they're looking to go raise $7 trillion. And so I can speculate that something like OpenAI may have a moat long term to accrue value. But I can with certainty say that at the GPU layer, NVIDIA has done very well and will continue to do well when other people need compute. That's also how I look at the AI world right now. I talk to a lot of people with a lot of GPUs these days, and the first thing they tell me is that they're getting offers from AI companies that need additional compute to render the software that they're looking to put together there. And so I think for the first time ever, a lot of people with a lot of different flexible setups are looking to deploy compute into the world of AI, and a lot of people are thinking that compute through AI could turn into more of a currency as well. And so the compute layer, it's pretty interesting to look at. Compute marketplaces, probably the natural extension. From there, at the application side, I think it's still too early to call it. A lot of founders are putting together a lot of ideas, but within open source tech, again, it's really hard to find a moat until you have true product market fit and build community around it. And so still keeping an eye out for what's happening on the application side, but I can tell you that there are a few developments that I've seen that make me incredibly optimistic for what the future could look like. Yeah.
So when I look at AI generally, there are two things that come to my mind, top of my mind. One is, in a general world, not crypto. I'll go to crypto later. One is ease of work. It's making things easier for everyone. You today posting on LinkedIn, you just use the AI feature, and suddenly the content is also done. The second thing is non-emotional decision making. So when you trade, you have your emotions attached to it. But when you have a trading bot which uses AI, the emotions are out and the structure is in. So I think these two things will definitely change how people work and take decisions in the future. Maybe you really don't need humans in the long term. Now, when it comes to so this definitely, as a technology, has great legs. It will go far. Now, when it comes to crypto, I think the two trends that I'm seeing is anyone and everyone who had any project last season is changing it to putting AI in there and saying now we are an AI project. Amazingly. So there are two new trends in this season. I've seen it in the last 2 months. One, change the name of your project. If your project was known as ABC last season, make it PQR this.
So how do you view this trend?
Come on, and it's all.
Okay.
So how do we actually, as investors, you keep on seeing that. We have seen projects that have been really slogging it out in the last 2 years. Again, there are teams which are saying they are AI but have zero people working on who have ever worked on AI in the past. Like there was this good project that I saw in one of the events in Saudi where they were building up a event app which would connect you with other people in the event. Looking at, the AI would actually see the characteristics of different people attending and you as well and match someone perfectly. They came with a clear AI background. So, when you look at those projects and you have been seeing them in the last 2 years, you believe they will add value. But most of them are just taking the hype and building up. So for me, I think there's definite use cases even in crypto. It can be either in trading bots. It can be there are some projects which are actually helping you build videos and images out of text. Using AI. They have a lot of applications in games as well. We have invested in a company that where you can train AI models to let your game characters play. So there are use cases coming up, but it's too early in crypto to figure what will be the future. But 100%, there's a lot of BS that's happening in the market right now. And we just need to be careful while investing and looking at these projects.
Thank you, Vinny.
Yeah, well, my thoughts the question could be divided to several, right? So the first one is AI is not just happening after ChatGPT, GPT-4, OpenAI, whatever, right? They has been there for decades. We have tons of the other application, right? So Lacy mentioned the deepfake, this kind of facial recognition, how about robotaxi, etc. There are lots of the other kind of trial and very established unicorn in the industry. But if you're looking at their revenue generation or whatever, right? So, for example, robotaxi, right? So Waymo, how many cars of Waymo are now on the street of San Francisco? So can they make profits? And can they be sustainable? So yeah, there are still tons of question marks. Still, AI has been there for decades, right? So what could be, well, before we talk about crypto, AI companies, how can they be developed? Can they develop a certain sustainable business model? These are some questions we probably should look at first, right? And second one is what's the different this time, right? After generative AI, what's different, right? So they could be more smart, they could they could be more helpful, efficiency, etc. But unlike internet, my personal view is AI is more focusing on helping to improve the cost side, right? So co-piloting or whatever, for sure, they will have be imminent, large improvements, of your efficiency, right? So you can either in the call center business, in the even when you are writing the blockchain smart contract, you can use AI, etc. They will largely help you to improve your cost, helping your bottom line. So I think that will be a huge difference. But it's fundamentally whether it can replace human. It's be that kind of intellectual. I think there's still a very long way to go. It's if we're talking about the tech curve, right? It's just kind of a start. The next question is if we're talking about what's the relationship between AI and the crypto or AI and blockchain, right? In my opinion, if we are talking about the world of Web3, AI is focusing to solve the problem of productivity, while blockchain will try to solve the problem of product relationship. And 3D indexing or what the other hardware, whatever, the Vision Pro or whatever, the other technology is solving to provide the real the factor ingredients in the digital world, metaverse or whatever. So those all components are necessary in that world, right? So that's why AI will, in the long run, will for sure in favor of blockchain. And also, if we're talking about decentralization or whatever, let's just mention, let's say if we are having AI massively adopted in next 2-3 decades, but GPU is still dominant by NVIDIA, the big model is still is dominant by OpenAI. Will you be afraid of that? Will the government be afraid of that? The only solution is decentralized, right? The autonomous, it's not, it's Lazy mentioned, it's the system needs to be live anytime. That's a reason. The other reason is I think the governance is very important in that sense. And also, if what's specifically in AI plus crypto, we would be interested is if AI agents, right, plus IoT, deepening this kind of thing, whether we can have some business model. So in the future, maybe an AI agent can talk with the other AI agent directly. They can charge them to help him. For example, maybe it could be a robot, could be a AI model, could be whatever. But AI agents, for sure, they cannot having a bank account, but they can for sure have a blockchain account, right? They can pay each other, they can facilitate. So that's also, I would say, in favor of blockchain development. That will be very interesting. But for now, we are as a fund. I totally agree with everyone. It's I think it need to be very prudent to develop, to deploy into the industry, given the valuation is a bit high, a little bit more formal here. The other reason is our strategy is you need to stay humble and thirsty, right? So for AI, to be honest, it might not be our top expertise. So we will be even more prudent in that sense. Thanks.
Thank you, Gavin, for bringing the government words up here. And I will continue on the question with the increasing attention from global regulations on blockchain technologies and cryptocurrencies. So how do you view this trend? And are there any particular strategies you advocate for navigating this dynamic landscape? Maybe Gavin, you go first.
Okay. So I came from finance and law background, and probably I can say a bit words about this. So, well, to be honest, I think by the end of the day, government policy, regulation is all about choice, right? It's if you choose one side, then we'll hurt the other side. So to give a very simple example here, like regarding decentralized DeFi, whether they need to have regulation, it's like by the end of the day, it's a question for principle. So in traditional finance, there is a KYC, KYP, know your client, know your products. You need to have a properly matching of the two sides. Then you can distribute the products or whatever, right? But like the essence of a decentralized DeFi is like, okay, we want to do kind of finance democracy or whatever, right? So everyone can access whatever they want. We don't need, we might not need to have big parents to decide which you can access to, which you can buy, etc. So this is more about like choices. It's not about like a procedure. It's more about like the format or whatever. So I think there will still, this kind of a debate will still be continuing. And if we are sitting in the seat of the government, like for sure they will need to protect the normal people, right? It's like not even back to the 2008 financial crisis, right? The U.S. established the Financial Consumer Protection Bureau is to protect the layman people. So that's in line with what the government thought. But like on the other hand, I think we see very good momentum either in U.S., in Hong Kong, in other like legislative jurisdiction. That we will see more kind of clarity from regulators. That is even more important compared to the result. If you have a final answer, then people have, oh, we can based on this to do this, that, and we can based on this to do this. So I think the clarity and the feasibility is even more important compared to the final result. Yeah, thanks.
So I have a controversial view on the regulation part. I think governments regulate something which affects masses. You know, in the Indian stock markets, 1980 stock markets came, people didn't understand that a share represents the future earning potential of a company. And, you know, there were less people on board. People, you know, there were two big scams that happened in between the Harshad Mehta and the Ketan Parekh scam. But go 10, 15 years ahead and a lot of people in India are in stocks. Things got regulated. Once the stocks happened, people went up the roof. The crashes happened, they jumped. So until it doesn't lead to such a case where the government has to take notice, full regulation doesn't come. Yes, if touches and bits of these regulations are coming up where you are regulating some exchanges, getting some things done. But full regulation, I personally think, is a long way ahead. What is important is education as well. You know, first of all, people have to understand what Bitcoin is in itself rather than regulating Bitcoin. If you go out on the roads, talk to a taxi driver, what does a Bitcoin do? He really doesn't have a clue. He still thinks that I will buy Bitcoin because it will go to $1 million because someone has told him on Twitter. So regulation for me is far away. Still, minimum 3 to 6 years ahead, full regulation. Education is something that people need to focus on and get people understanding on what we are trying to do over there.
Thank you.
Yeah, happy to share my thoughts on the regulatory side. So I think it has a lot of implications on, you know, the regulations of a country have a lot of implications for the kinds of costs and structures that founders end up putting together within these countries, and like the implications for how these businesses can interact with other businesses in other countries. And so for example, in the United States, since it's, you know, so it has like a lot of ambiguity in the regulation, a lot of founders might find themselves paying like quite a lot of money in order to set up businesses where if you were to set it up in another geography, it'd be a lot cheaper because now you have to find a lawyer who's willing to take the risk to say it's okay. Separate to that, you know, it's interesting to look at the history of a lot of these different countries. For example, if you look at the UAE, you know, a city like Dubai, the reason why Dubai is so successful, even though Abu Dhabi is like, you know, such a great place, is because it made its regulatory structure and its laws composable with, you know, UK common law. And when you do that, you know, businesses within these geographies have a lot more predictability on what sorts of outcomes they can expect because they've already done that sort of homework and they have a lot more comfort around, you know, their own legal system. And so I think that's definitely something a lot of these geographies should consider when they're looking to break in and, you know, take a lot of talent in and, you know, try to become the new hub for Web3. But yeah, I think like over the next few weeks or few months, everyone will probably be very thrilled to see a lot of, you know, new opinions on, you know, how people view, you know, the future of crypto within their respective geographies. So definitely some of the most exciting times in the world for Web3 right now.
It's a little bit tragic right now in the US. As a founder, you're from the regulation side, you're incentivized to just release a meme coin that doesn't do anything. You take less risk than actually trying to build something of utility. So you have this really, really perverse incentives right now. And so I think that's a problem. On the other side also, I like this Benjamin Franklin quote who said, you can always rely on the Americans to do the right thing after they've exhausted every other option. And that's kind of what the US felt like in last, at least since Biden got elected, right? They're just shooting in all the wrong directions. They're trying to kill it. But then you can fight back with the courts, and it's, like I said, there's a lot of ambiguity there, and I think it's actually a good system for change, because, you know, you have this, it's really unlikely that a bunch of bureaucrats are honestly going to be able to predict 10 years, 20 years in the future, and then regulate this properly accordingly, right? This is the space that's evolving, and so just people starting to regulate it, it's kind of an arrogance of regulators that they think they can predict really what the outcome is here of this industry. So I like this American system, a lot of chaos, a lot of ambiguity, but it sort of figures itself out over, yeah, some difficult times and some uncertainty. It is also, at the end of the day, it's really only the US that matters. You saw when the EU signed off on their regulation, the markets didn't move at all. Nobody even knew this was happening. So at the end of the day, it's all going to be up to the US. But there is, you know, global competition now between jurisdictions. And that's great because you've got the UAE, you've got Switzerland, you've got Japan that are very pro and that are moving this forward. And yeah, it's a global world now, and you can just move as a founder somewhere else to another country and do it there. And you've seen this, you know, that the US lost actually Web3 engineering talent to other countries, and the market share fell. And because you have this jurisdictional competition, and that as a political message has been heard in Washington, D.C. So, you know, again, coming back, I think the US will figure it out. It'll be a few more years of sort of things being quite messy. You also have now, I would say, like, just because you have these strong commercial interests or corporate interests that basically solidified crypto, at least Bitcoin is part of the financial establishment now. So now that gives a lot more clarity, even though regulation-wise maybe it's not so clear. So I think you will also have this mix of just corporate interests moving further into the space. They want to be offered, they want to also offer Ethereum, you know, and staked Ethereum as a product. So if that happens, then, you know, whether even the regulatory status of Ethereum isn't that clear, but, you know, it's part of American finance now as well through ETFs. So what I can say is a lot more kind of like chaos and sort of uncertainty. But the great thing is that in the US, it's very participatory. It's very easy to create a super PAC, start funding, you know, politicians that endorse your policies, start funding industry associations that are educating lawmakers. And so I think eventually the US will figure it out.
It's not about just building a faster car, but also make sure the road can handle speed, right?
Yeah, and that the regulator doesn't put a speed bump every 5 meters because they thought that was a good idea, you know?
Yeah. Thank you. And as our journey reaches its harbor today, and I will extend a thank you to our panelists. And I also thank for all the audience joining us today. And before we part ways, allow me to make a commercial here. And we have written a book about how you evaluate the digital assets from an institutional perspective, and perfect for anyone looking to make sense. Grab a copy after 20 this month at any bookstore in Hong Kong if you are curious. Okay, thank you very much for today.
Cool, thanks.